Welcome to the PHYSIOMission Podcast. In this episode, I'm going to share with you 5 downsides, 5 reasons that you do not want to open up a cash-based practice. Now, cash-based practices are really, really awesome and they're good for some people, but they're not good for everybody. And when you're making that decision, hopefully this episode is going to help to show you the dark side of cash-based PT. The upside's easy to see, but sometimes not everybody really takes into account the downside as well, and that's what we're actually going to talk about in today's episode, so stay tuned. Hello and welcome to the PHYSIOMission Podcast. I'm your host, Dr. Jared Cooper. This podcast is dedicated to helping young, aspiring physical therapists navigate the muddy waters of what has now become our profession. I want to help you maximize your impact, your income, and your freedom. Throughout this podcast, I'll be interviewing mentors, clinical gurus, and successful business owners who have paved the way and shown us how it's done. Along the way, I'll also be sharing with you some secrets to my own success and how I started a private practice from scratch, developed an amazing team, and built and grew it to a 7-figure business. So without further ado, let our mission begin. We all know some of the amazing benefits that running a cash-based practice offers. First of all, the money's good. You don't have to spend 7% of what you bring in to pay a biller. Or if you have an in-house biller, you don't have to pay an in-house biller, right? So you keep the lion's share minus whatever credit card processing fees that you bring in. Number 2 is that it's predictable income. You get to set your price and you know exactly what you're going to get paid, and you get most of your money, if not all of it, up front. And that is a huge bonus, especially when you're trying to set budgets and you're trying to figure out exactly what your income is going to be for the quarter or for the year. The flexibility. You get to set your own hours, which is amazing. You get to say when you work and when you don't work. You get to set your own price. And you essentially get to run the business exactly how you want to run the business. As you know, you're not tethered by what the insurance company says is or isn't covered. And that freedom. And, one more thing, I should also say that the documentation, right? You have to document well, but you don't have to document for anybody other than yourself and maybe a legal entity should something happen. But you don't have to document for those damn insurance companies anymore and put in stuff and check boxes that are just kind of a waste of time sometimes. So there's so much more freedom when running a cash-based practice. And with that freedom is just that's probably one of the most important things in life, right? I talk a lot about impact, income, freedom. Those are the 3 things that every physical therapist really wants out of their professional practice. And that's the mission that you're on, is to find those 3 things. The freedom is number 1. And with a cash-based practice, you make all the calls, you make all the decisions, the freedom is there. Oftentimes the income is there and the impact is there. But it's not all golden roses. There is some downside to running a cash-based practice. In fact, there are some big downsides. And there's also some big risks. And I'm going to share with you 5 negatives about running a cash-based practice, things that you really need to think about when you're starting a model like that, and you're making a decision that is how you are going to essentially position yourself. Because once you decide on a cash-based model, there's a lot of other things that go along with that. You have to market differently. You might set yourself up differently. You have to take money a little bit differently. You have to have conversations differently. And if you're a new grad and you're thinking about opening up a cash-based practice, I don't want to dissuade you from doing it. It's a really, really good opportunity. It's the right time to do it. But at the same time, it's not right for everybody. And there's quite a number of downsides, which I'm going to share with you right now. Downside number 1. You're still trading time for money. If you don't work in a cash-based practice, you don't make any money. You can't go on vacation. If you go on vacation, you don't make any money. If you don't wake up early in the morning and see a patient, you don't make any money. If you don't stay late at night, you don't make any money. Opening up a cash-based practice where you are a private practice, you own the practice, but you're the one doing the work, that's not a business, because it's something that relies on you being there. Whenever you trade time for money, you don't have a business, you have a job. And whenever you have a job and you're trading time for money, you don't really have freedom. And freedom and time is more valuable than income in many, many ways. And that's one of the big challenges with a cash-based practice, is that you're still trading time for money. Downside number 2. you have to spend a lot of time, energy, and money on new patient acquisition. There are 3 parts to any business: acquisition, delivery, and retention. And acquisition, or bringing in new customers, sits at the top of the funnel and is the beginning of any customer journey. It is way harder to get somebody to come in and pay cash for something than it is if they have at least some form of insurance coverage. If you think about it, you and I, if we have insurance, we're already paying for our insurance, usually a lot of money. And it's a hard pill to swallow to think that, okay, I'm paying for an insurance that I cannot use and I have to pay again in order to get good service. That's hard for some people to understand, and it's hard for some people to appreciate. Now, we all know that if you spend 45 minutes or an hour with a patient, you're going to get a lot more done than if you spend 10 or 20 minutes. So it's not really a question of whether or not the value is there or not. Certainly in a cash-based practice where you're spending a lot of quality time, the value is there. But the effort that you have to put in on the front end to persuade the lead or the potential customer to come in, you have to have rock solid front end funnels and a really good marketing strategy. And for a lot of physical therapists, that is very, very challenging, especially when we didn't learn any of that stuff in school. And even if you do know what you're doing, you still have to spend money and put money behind ads, Facebook ads, Google ads, whatever it is, or you got to put in time, go out there doing workshops and networking and those kinds of things in order to bring those patients in. When you have a hybrid or insurance-based practice, yes, you still have to spend money on ads. Yes, you still have to put effort in. But let me tell you, it is a hell of a lot easier and the conversion rate is so much higher that you need fewer patients to come in the front end in order to get the patient load that you need in order to run a good practice. Downside number 3, no exit strategy. When you have a cash-based practice, how do you get out? I mean, it's extremely difficult. It's possible, but it's extremely difficult to sell a cash-based practice. You'll never sell it to a bigger company. I mean, we've had our company looked at by some of the big dogs trying to buy us out, and a lot of them don't want to because we're out of network with most insurances. They want to buy in-network practices because the big dogs have negotiated rates with the insurance companies, and they want a smooth transition. They want to go from your practice to their practice with as little hiccup and effort as possible. They'll never buy a cash-based practice, ever, because they know how difficult it is to keep the front-end funnel full of new patients in a cash-based model. And so how do you get out? You could try to sell your practice to another practitioner, but now the trick is you got to find exactly the right person. And then how much is any one physical therapist going to pay for someone else's practice? If you have a physical therapist and they're going to buy you out. I mean, look, if the big dog's buying you out, they're going to buy you out at maybe 3 to 5 times multiple on your gross income. So that might be $1 million to $2 million buyout, depending upon the size of your practice or more. But I mean, a PT is not going to have that kind of money. So if a PT is going to buy you out, what are they going to buy you out for? 50 grand, 60 grand? It's not even a year's worth of income. So it's nearly impossible to sell a cash-based practice. And if you can't sell it, then the question is, what's the exit strategy? You work, but how do you get out? And more importantly, you put all this money and time into building it, and that essentially becomes an investment, an asset, but you can't ever get the money back on the asset. So you have to rely on the dividends that asset pays off year on year, which is essentially your income. But at the end of that, if you get that income and you're buying a house and you're buying a car and you're buying stuff, then where's the retirement? Like what do you do at the very end? Whereas if you have an actual business that is profitable on a multiple of what one therapist can make, meaning if we have at a network, a hybrid practice or an insurance practice where we got 4 or 5 therapists who are all making money, now all of a sudden that becomes attractive to not just the individual therapist, but to a larger company. Or if someone's going to buy it out, that person might be on the business side, not the PT side, and wants to make an investment. So no exit strategy is one of the reasons cash-based practices are challenging as a long-term strategy. Downside number 4, a cash-based practice is not recession proof. I remember back when I was a personal trainer, I started personal training, I think in 1999. This was literally right before the bubble burst. And I remember the first thing that happened in 2000 when the tech bubble collapsed was that people got really skittish about paying for their health. It sounds crazy because you and I as physios, we prioritize our health, but not everybody does. And if you have a mild case of tennis elbow and you got money in the bank, you don't mind paying $175 an hour to have somebody treat it. But when you lose your job or your spouse loses their job and you don't have that income, spending money on an elbow, it becomes a little bit more questionable. So cash-based practices are quite a bit less recession-proof than hybrid or insurance-based practices because the only way you can make money is by asking people to spend their income on your services. And obviously, when you have an insurance-based practice, they're already spending their money on the premiums. When people go out of work, they go on COBRA. So for at least some amount of time after they're out of work, usually they still have some version of insurance and they're still going to utilize that insurance. So there is an element of risk inherent in cash-based practice. And if you think that a recession's not coming, you are sorely mistaken. In our lifetime, we will probably see at least one, maybe two more recessions. And it will come. It's not a question of if, it's just a question of when. Finally, downside number 5. It's harder and in many ways almost frowned upon to look for doctor referrals. Now, if you listen to a lot of the cash pay PT gurus, it's almost a badge of honor to be able to run a practice without relying on physician referrals. But the reality is, physician referrals are great. I mean, the customer who comes in when they're referred by their physician is completely pre-framed on your business. When I get somebody that comes in and says, my neurologist told me that I really need to come and see you, I could be charging that person whatever I want. Insurance, no insurance, they're going to want to pay because their doctor said they need to go see Dr. Cooper or they need to come to Moment Physical Therapy. When you get a doctor referral, the person is so much easier to get on board and to get that buy-in in order to what you're doing and into your practice because they're pre-framed. They're pre-framed by their physician. In a cash-based model, it's not impossible, of course, but it's harder to market to physicians, to get physicians to want to refer to you. Unless, of course, they also are cash-based physicians or concierge physicians, then they're running a cash-based practice. So, of course, their customers are already sort of the expectation is that they're going to pay cash. But the majority of physicians, of course, are insurance-based physicians. And they are hard-pressed to refer to a cash-based practice. I was on the phone with a buddy physician of mine today who's a very prominent neurologist in Jersey. And he, at the end of the phone call, he said to me, hey, man, what networks are you in with so that I can refer you more patients? And we're not in network with anybody except for Medicare. And so, if you think about that, if you're in network, it's so much easier for the physicians to refer to you. When you're at a network, they'll still refer to you, but it's harder. And if you take no insurance whatsoever at any point in time, then getting physician referrals is hard. And so you almost have to flip that on its head if you're a cash-based practice owner or you are a proponent of the cash-based model to say that we don't have to rely on physician referrals. Well, that's true. You don't have to. But physician referrals are easy money. I mean, they're sending you patients, which is awesome. And if you get a good physician, you don't need a lot of them, but you get a couple of good physicians on your side, it's like they just crank patients out and they send them to you. And it's so much easier than having to go out and find patients, to spend time, energy, and money finding patients. So cash-based model, a lot of benefits. Doctor referrals is not one of them. Hopefully you enjoyed this episode. Now, I think it takes a lot of guts to open up a cash-based practice. So kudos to anybody who's got the balls to go out there and do it. But hopefully this gave you a little bit of the other side of the coin and you trying to make the right decision for yourself and for your business. So I hope you enjoyed the podcast. If you haven't done so already, make sure to head over to iTunes and please leave us a review and let me know what you think of the podcast and make any suggestions you have about, future guests or topics that you want to learn more about. This is Dr. C signing off. We'll see you guys next time.